Good afternoon from Columbus, Ohio to all across the Buckeye State. Thank you for joining us today in our second installment of the Ohio Connects webinar series here on May 18th for local governments. And now a slide for housekeeping. More than 1,000 colleagues in public finance from villages to cities and counties are with us today. Welcome. Our speakers today are OBM Director Kim Murnex and the OBM Senior Financial Manager and Chief of Ohio Grants Partnership, Stacy Massey. This is being recorded and can be viewed at a later time, just like our first installment from last month. Please note the 5 bullets above as our housekeeping items. At any time, you can reach out to grants@obm.ohio.gov. Slide. And now I'd like to turn it over to our Chief of the Ohio Grants Partnership, Stacy Massey. Stacy, the floor is yours.
Thanks, Pete. So welcome. Thanks for sharing your afternoon with us again to talk about the American Rescue Plan and the state and local fiscal recovery funding. And so that's going to be our main focus today, to talk about the state and local fiscal recovery funding. The first thing I want to do is kind of give a disclaimer. There's 150 pages of interim guidance that's came out since our last webinar in a couple weeks ago. And so that's been a lot to kind of dig into and figure out all of the different nuances of this funding. It's very different from the coronavirus relief funding. We'll talk a lot about that today. But I kind of want to start out with letting you know that there are a lot of unknowns still. Although there were 150 pages, there are still some unanswered questions and some additional clarification is needed, which I'll bring some of those up as we go through our discussion today. I also want to say that you all will be potentially be the prime recipient of these funds with the U.S. Treasury, whether you receive these funds directly or as a non-entitlement unit of local government. You'll still be directly responsible for reporting to the U.S. Department of the Treasury. So I just want to make sure that this is more like educational. This is some of my interpretation of the guidance, kind of pulling things out and how I've read the guidance from my past history of grants, and the differences between coronavirus relief and what's in the 150 pages plus the Q&A or the FAQ that's already been released. I expect this program to be a little bit dynamic like the last one was. So as we move forward, we hopefully have some time for questions at the end. We may not have all the answers, but again, we're here to help. We're here to help you navigate this process. But at the end of the day, the U.S. Treasury is kind of the one that's in the lead, in the prime for all of this. So let's get started. So first we'll talk about, and I think this slide was in the last presentation if you saw it, where the state and local fiscal recovery fund and kind of what that looks like. So if you haven't been there yet, the interim final rule, the fact sheet, FAQs, and a quick reference guide. It's kind of like a 2-page document to give you references on allowable costs. That's now published on the U.S. Treasury website. You can find that website here. You can also Google U.S. Treasury state and local fiscal recovery, and you'll get that site as well. And it also, the state and local fiscal recovery fund is broken out to various allocations. So allocations for counties. So all 88 counties have a direct allocation from the U.S. Treasury. Metropolitan cities as defined by the actual statute. And that is direct from the U.S. Treasury. And those two allocations, you're allowed to now directly apply for that funding. That portal is open. We'll talk a little bit about that process. I have navigated that process, so I don't know that I have great tips, but I can at least talk you through in case you might have a little bit of heartburn if you've started this process. And then non-entitlement units of local government, we're still waiting for guidance and the actual allocations to be published from the U.S. Treasury. Some of the guidance for that has been in the 150 pages of interim final rule, and we'll talk about that throughout this presentation today. But there is still more that we're anticipating to drop this week. We're not quite sure when. The U.S. Treasury had indicated on some calls last week that that information would be out this week, that they needed additional time kind of figure out all of those allocations. Once that gets published, we anticipate the state should get the funding shortly after. We have already applied for funds last Thursday, so we're still waiting for funding. And we don't know if the non-entitlement will come with our funding or at a later date when they drop the guidance. But once we have applied, that means we've applied on behalf of non-entitlement units. I will caution, though, that there is a process that I think that they're going to have us go through. We'll talk about that today. And we will have to have appropriation at the state level to expend those funds to get them to you if you are a non-entitlement unit of local government. So that process will take some time to actually get through, even though we may already have, by the time we've received the funds, we then have to start the process with appropriation. And then the state has an allocation as well. And then I just wanted to, the last time we met or had a webinar, we didn't have actual numbers. So now we do know what our estimates are going to be. I guess that still says funding estimates, but now these are final. The counties, the metro cities, the state, and the actual non-entitlement, which we don't know who those folks are. We still don't know anything about townships. There were, I think, 3 townships that were funded under the Metropolitan Cities formula, and they got direct funding. So we're hopeful that townships will be included in the small cities and villages after that appeal has been made to them. So more word on that hopefully this week. So how is funding going to be distributed? So if you need to apply, if you're eligible for a direct allocation, you need to apply through the U.S. Treasury portal, which is at portal.treasury.gov. As soon as you go through this site here, you are going to get redirected to something called ID.me. And that is something that I don't think is explained well. It's in an FAQ by the U.S. Treasury, but I'm not seeing it on any of the Treasury's done a couple webinars. I've not seen them discuss this. And that has given a lot of folks some pause when they go out to do that. I had to navigate that process, and I probably had the worst scenario of it in a sense that if you go through and you have to give your driver's license front and back, a picture of it, your social, your birth date. Once you get through that process, then you either get validated through that ID.me company that's like a third-party validator for U.S. Treasury, or you may get off kind of triaged into additional validation, which happened to me. And I had to then provide 2 other identifying pieces of information similar to when you get a compliant driver's license. So those pictures had to be uploaded in that process. And then I had to do a video call with someone from the ID.me. So we have gotten a lot of emails from in our grants box about the process. And we have no control over what the U.S. Treasury has made the process for funding. We do sympathize. A couple of us had to go through this process. We understand it. It might give you a little bit of pause because of the environment we live in, with putting all that information out there. It definitely made me uncomfortable. However, it's protected, it's encrypted. That's what's in the FAQ by Treasury and is the process that Treasury is requiring. If you want to, you could email the Treasury if you have concerns and want to do a different process or approach. And I also will say that you do need a smartphone to complete the process, which I didn't understand that when I first started the process. I was on a computer and then I had to kind of navigate to a smartphone and get the app, which made it a little bit more problematic because now I was kind of logged in 2 different areas. So you do need a smartphone. And once you get through that and you can take the pictures with the phone and upload it, every time you go out to the Treasury, it will send you a notification. You have to approve your sign-in. So it's kind of a validation every time that you log in, kind of a secondary authentication. So I just want to get that out there because I know a lot of folks had a lot of questions about the ID.me process. That is something new to Treasury. It was not done with the CARES Act. But again, I think they're trying to, with the additional folks that are directly funded, try to minimize the amount of identity issues or fraudulent claims against funding. So once you navigate to that and you get approved through ID.me, oh, and I forgot to say, you do have to do a facial scan and take a selfie picture. So that's where you need the smartphone. So once you kind of navigate through that process, Then you'll get into the Treasury site, and it will allow you to then submit your application. Now, I also did want to say before I click to the next slide, if you are a non-entitlement unit of local government, you do not have to apply for funding right now. That will come through the state, so you do not have to go through this ID.me process. We do not know, we're still waiting on the guidance on whether or not the reporting you will have to do directly to the Treasury will require you to go through that. I suspect it will, because you'll need to get into the portal to do the reporting. However, there is another reporting tool that they use for coronavirus relief funding called Grant Solutions, and it does not require that. So I would not go through that process right now if you're a non-entitlement unit of local government, or assume that you will be at this point, because we only have estimates. I would wait until you definitely are told that you need to get through for that process. So I would stand by for that. But if you are a direct allocation, you will need to go through that. So when you get into the portal, it essentially only asks, basic application type information. You'll need a valid DUNS number that's registered with the SAM. You'll need your entity identification number, your name. It needs to match with your SAM registration. I think if it doesn't, it may draw an error. So you want to make sure that you know exactly what the name is on your SAM registration. If it happens to say, the executive office of such and such, or the commissioner's office, or whatever is registered at the SAM is what you want to make sure you are applying with. Your contact information being your authorized representative, and then one additional contact. And you want to make sure that the person that's going to be doing reporting, if you're a direct recipient, goes through the ID.me process. So if the person that's going to be doing reporting, you may want to have them do the ID.me and actually do the application. The authorized representative does not have to have access to the portal or go through ID.me. They will get a DocuSign email after you've entered their contact information in here, so that they can sign off on the actual application for submission. But they do not have to go through the process and get a login. And then you'll need your financial institution information. So your routing and account number. I believe many of the payments, at least the emergency rental, were going through ACH. So you'll want to make sure that you have that information and whether you can accept an ACH at your institution. Do not pay, and I've said this on the last one, do not pay to renew or register with SAM. I have gotten more emails, and these are just two that my spam filter had gotten. But every week I probably get 10 from different companies with different variations of an email address that look like they're part of the SAM renewal process, telling you that you're due for renewal, or this is your final notice. Don't pay a company or click a redirect link to have a company renew your SAM. It's fairly painless. There's a federal help desk that you can call if you have any problems navigating the process. Get with us and we can help connect you with the federal help desk, or maybe look up some basic information to help you. Maybe you already have it registered at the SAM, it's expired and you need to renew it. So if you run into some of these situations, contact the grants box and we'll help you navigate it. So again, we're still waiting on the final guidance from the non-entitlement distribution, but we do know what was in the interim final rule. And in the interim final rule, it talks about distribution going out in 2 different payments. So the first payment being whenever they release that and the state is able to get appropriation approval through the legislature and get those funds, validate you and get those funds out to you. And then 12 months after the first payment, we'll get another payment from Treasury that we'll distribute to you. So if you do see an allocation get published this week, don't expect to get the full amount. You will get only half of it, and then a year later, you'll get the other half. Also, there is a cap that the state has to kind of manage to when dispersing funds to you, that the sum of both of those payments cannot exceed an amount equal to 75% of your most recent budget as of January 27th of 2020. Now, that most recent budget was defined by Treasury as being the recent annual total operating budget, including general fund and other funds, as of January 27th of 2020. And I think that a lot of local governments may be in a situation where they're on a calendar year, fiscal year, and they may have been in a temporary budget situation. And if that's the case, I would say that you could revert to this Treasury definition to say that, if you were temporary, although that's a legally enacted budget in the laws, the Ohio law, doesn't mean that it had all of your total operating components to it. It was just enough to kind of get you to a total operating budget for that fiscal year. So if that situation, we expect many may revert to what their budget was at the end of calendar year 2019, which may be the most recent enacted total budget. So that's going to be kind of a situation where governments will have to figure out what budget was really in play at this January 27th point in time. And we'll have to confirm that information one way or another. And once we figure out what that process looks like, we'll be getting information out so that we don't pay over 75% of that cap. Again, we'll develop a process. It will be similar to the coronavirus relief funding, where we'll put it up on our website. You'll be able to go in and just fill out all of the information and maybe have to upload, worst case scenario, upload a budget page with your total actual budgets that's certified or something like that, so we can validate that. We haven't figured out what we totally have to require you to do based on, so we're kind of waiting on that Treasury guidance. So let's talk about the interim final rule and the FAQ that came out. And I know I've already talked a lot about this, but it was the U.S. Treasury published on May 10th, the interim final rule, which is going to be at 31 CFR 35. So that's the codification. And also they had an FAQ. There was 18 pages of FAQ, which I believe, if you remember correctly, the coronavirus relief funding FAQ, when that first came out, I believe it was only 4 pages the first day that it dropped. So they've come a long way at kind of putting together a program at the onset of providing funding, which I think is very admirable, because I think that was one of the biggest complaints I've heard from a lot of folks from the last round of funding. But it was 151 pages of rules, so I think it was very encyclopedic. It was very long. So again, we're going to try to navigate some of that to help you through it today. And so again, I just want to reiterate, this is not the same as the coronavirus relief funds. So the guidance is reflective of really a new program, and we're entering kind of a new era of the pandemic. I think the first wave of funding, which was last year, about this time last year when we were doing a lot of webinars about it, was really the response. So if you're kind of from the emergency management world, there's kind of the response in a disaster, and then you kind of enter this recovery phase. And I feel like we're kind of entering the recovery phase now of the pandemic, and our choices and thoughtfulness of spending may be very different. And I think that this interim rule is very reflective of where we are. So some of the changes from the coronavirus relief funds, and there's many, so I'm just going to talk about some of the ones that I had noticed. First, it included a lot of direct distributions to local governments, so that's kind of the obvious one. It was definitely a shift before, where it relied on states kind of figure out those allocations. Now they've figured out directly who they would like to fund. Use of fiscal recovery funds is forward-looking. So many times throughout this 151 pages, it talks about this being forward-looking versus that previous concept where it was really only dealing with items that were a part of the current pandemic, which the current pandemic was very dynamic in the last year or so. And things that were even at the very beginning, coronavirus relief funding, about the vaccination, that we would say, well, if you're preparing for that, the funding will probably end before the vaccination is available. And then everything kind of changed. The funding got extended, vaccinations became available in late fall. So I think that, we're in a different phase now, and everything's kind of forward-looking, planning for recovery. There was expanded emphasis throughout all of these pages about eligibility on the use of funds. It has a lot more categories. It was very detailed, but there's a lot of emphasis on thoughtful planning and assessment on the use of funds. And so one of the examples that they have in the guidance is really asking the question, does a program or service respond to negative economic impacts? And it's asking you really to assess the connection between the negative economic harm and the public health emergency, the nature of that, and how the use of funds would address that. So I think a lot of folks were just kind of in the response mode before, where I know I need to get dividers. I know I need social distancing. I know, and kind of doing a lot of random things that met the needs that were deemed necessary. And I think that throughout this 150 pages, it's really encouraging folks to be a lot more thoughtful and looking to getting areas that are unserved, such as in broadband, and focusing in on things and kind of be very thoughtful about where you're putting your funding, because you do have time. It's not a rush to expend it before the end of the year. So again, my last bullet, there's the longer time period on the use of funds. And we're going to talk a little bit about obligation date and this longer performance period, because that's a little bit different than coronavirus relief funding direction. So I wanted to bring this up because FAQ number 6 talks about, if a use of funds was allowable under the CRF to respond to the public health emergency, can we presume that it was allowable? It's allowable under this new pot of money. And so they use the word generally, which they use the word generally a lot, which kind of gives me a little bit of pause because it's not really a definite answer. But generally, funding is allowed. You know, if it was eligible under CRF, then it would be eligible under this. But they gave 2 exceptions, and I wanted to point out the one highlighted. The standard for eligibility for public health and safety payrolls has been updated, and they don't really elaborate on what that means. And I'll talk through. I have lots of slides on the payroll piece, but there are some areas where they talk about payroll and what is needed, and I think that is where they have kind of made it so that there's a stronger tie to the folks that are charged to the fund being part of the response to the pandemic. So before it was kind of, well, if your job had changed substantially or you were doing things to respond to or mitigating it, and the use of mitigation isn't really in the terminology. So I will highlight that because that's straight out in the FAQ. That was one of the 2 exceptions, and the other one is expenses related to tax anticipation notes. It was deemed by the prior administration and the prior as an eligible use of funds under the prior program, but this one, it's not. Any funding of debt instruments or whatnot is not eligible under this funding, which I think I have that again in a few slides, so I know I'll be repeating myself. So again, payroll cover benefits for, and they use the same grouping of people: public safety, public health, healthcare, human services, and similar employees, same language, to the extent that their services are devoted to mitigating or responding to COVID-19. So it talks about being devoted, but it does have that administrative convenience language. But when it talks about that, it says there's administrative convenience allowing for the use of, or allowing for you to presume that someone, if they're working, and it talks about an employee or his or her operating unit or division. So it gives you a little bit of latitude to say, you know, a division is primarily dedicated to responding to the health emergency. So it gives you that convenience. You can presume that 100% of somebody, if they are primarily dedicated, and so it took away the substantially dedicated, now it's primarily dedicated to responding to the public health emergency. So that presumption is still there, but it's very clear that that they need to be responding to the emergency, not necessarily impacted. And then, and it does give you a little latitude with an operating unit or division, but it then goes on further to say that for those that maybe don't have that presumption, so let's say someone that's in the healthcare arena, that you can also periodically reassess an employee, division, or operating units engaged in these activities by going through and maybe doing an analysis, some attestations, some work product, correspondence demonstrating the work that they are doing on their response. And that would allow you to kind of maintain the records of folks being primarily dedicated, but not having to routinely track staff hours. So for the folks that don't kind of fit into this administrative convenience, you kind of have this added layer where you can track the documentation and put someone or work unit on there, as long as you can prove what they are doing is primarily dedicated. Now, it does not mention that administrative convenience by indicating such that you do not have to have documentation on how someone fits into that presumption and how they're primarily dedicated. So I would contend, although that the language seems to indicate that that presumption was there, that the standard for documentation is not as simple as putting a resolution together and saying folks are substantially dedicated. It doesn't talk about, you know, what level of documentation. However, I think that, you know, they've entered into kind of this new territory of requiring a lot more for personnel costs. So I would caution you, if you are going to use that presumption, to figure a way to get some documentation that folks are primarily dedicated to the health emergency, and how you will support that if you are going to, for public health and public safety, exercise that administrative convenience or accommodation. Reporting requirements got significantly more detailed. So they expanded it from the CRF. Before we received funding from us, we were kind of handling this where you reported to us on our portal. We were rolling things up under, I think there were maybe 18 different reporting elements. Now there are, on my next slide, we'll actually give you kind of a chart. There are 3 different components to reporting. So depending on who you are, you have different reporting requirements. There's now annual requirements, and they are really talk more to more programmatic tracking. So not just where did this spending come from, what did it tie to, and what purpose did it meet, and what, you know, category can I tie it to, but really programmatic type of tracking on what accomplishments and what outcomes did I get for the funding. And that's where I say the thoughtful planning, because they're going to want to see in your reporting that you tied that that funding to specific goals of your entity or your local government for recovery. Also, the non-entitlement local governments, which this will be a change, they will report directly to the U.S. Treasury. That is in the final rule, so that will not flow through the state. So like I said before, there'll be more guidance on that, and you'll figure out whether or not you'll have to go through that portal. I'm not sure they've figured that out yet, so when they do, I'm sure they will publish it. We'll make sure you'll get that information. Some helpful tips that we learned going through the reporting process, at least at OBM. Helpful tip number 1, as you're kind of thinking through reporting, if the reporting requirements aren't out yet, and what those reporting elements will be, here's some of the things that you might want to start thinking about and getting organized. Establish defined projects through the use of your funds. So one of the things that was very helpful to us when we started reporting with U.S. Treasuries, we had kind of 40+ projects that had a defined purpose and goal, and then there was funding underneath of each project. So start kind of lumping everything together into kind of a defined project with an outcome and what your plan is for recovery. And the reason why that is important is because it will start kind of giving you a structure on how you've decided to use your funding and what belongs to what, so that when you start categorizing stuff, you'll be very well organized. And you may want to find something within your accounting system, some type of account or some kind of code or some type of chart field that you can kind of tie to each one that will say, oh yeah, that belongs to project number 1 or project number 2. But that has been very helpful for the state in our reporting, and I definitely would recommend that as you're kind of thinking through things. And the second tip that we think might be helpful is start planning an approach to track your activity to meet the reporting requirements. Now, I know that we don't have a whole lot of information on it yet, but some of the things you can start thinking through is how will you track expenditures by category? You already had to kind of do that a little bit for if you were reporting to OBM for your expenditures using the categories from before. So is there any lessons learned or any ways that you might change that tracking? Other than just throwing everything on a spreadsheet and going line by line and figuring out, oh, that belonged to this and that belonged to that. It's probably not super efficient, and this will be over a longer time period, which you may have turnover in your fiscal shop. So you're going to want to think through this and document what your process is going to be. What report will provide you purchase order information on expenditures over $50,000? So we know for a fact they're going to follow some of the same types of reporting. So any expenditures over $50,000 that ask a lot more detailed information on that. So you might not have had to report that to OBM before, but now if you have to report direct to Treasury, they're going to ask that information. So you need to know kind of supplier information, like such as their address, their personal or their primary place of performance, and then the obligation amount, which would be the total amount you encumbered or contractually had to them. Your current quarter obligations, if it's by quarter. If you do it annually, I think the non-entitlements will do this annually. be your annual amount and related expenditures to each one of those purchase orders. So do you have a report that kind of reflects that now? And then also the same thing for contracts. Do you have a report that will give you kind of the contract number or contract type amount, period of performance? That may be something you don't have that, or you can't spit that out of your system. So as you start expending the money, you may want to keep those details on a spreadsheet. I know spreadsheets, seem old school, but sometimes, they're very good at, as long as you keep it up to date every time you have activity and you reconcile it up, they can be very helpful when you have to sit down and do reporting. Whoops, sorry, I went backwards. So here's a little chart that I put together on all of the various reports that are going to be required. So there will be an interim report that's required for the state, the metros, and the counties. That is going to be due August 31st. There hasn't been any information come out of that yet, but I suspect it will be a little bit like the CRF interim report was. It was very high level by the expenditure categories that they select and the total expenditures and the amounts obligated at that very high level. And that will be from the date of award through July 31st. So not a whole lot of time, but just enough time to maybe have some expenditure activity. So that will be due on August 31st. And then there'll be quarterly project and expenditure reporting for all of the directs as well, which will be on a calendar quarter starting October 31st. I believe the first one will include a couple quarters there, and then you get caught up just quarter to quarter. So then it'll be 30 days after that. So the good thing about this is that they're recognizing a 30-day period to do reporting when the coronavirus relief funding only has a 10-day window to do reporting, which has been very problematic. And we're usually just, barely throwing information in and having a chance to validate it before you can get it reported to them in just that 10 days. But that's really financial data, all of the details behind your spending on these quarterly reports. Then a new one is an annual project and expenditure report, which this one will be just for the non-entitlement units. It will be annually. I think it will look a lot like the quarterly reports that everyone else will be filing. The same information, just be doing it annually. So it will be probably an undertaking each year to kind of put that information together. Hopefully you can start kind of putting it together as you go. And you'll also have up until October 31st each year to complete that with the U.S. Treasury. And then there's a recovery plan and performance report, which is brand new. That is for state, metros, and then counties that have over 250,000 residents. So that may not be encompassing of all, but you have to hit that criteria. It is more of a project-based type of report, talking about funded projects, what your project outcomes are, your key performance indicators. So again, they're really hitting project outcomes and being very thoughtful about spending. One of the caveats on this annual report is that it also must be published on a public-facing website. So that's something you might want to start thinking about, how you will stand that up if you do meet the criteria for this report. And that's going to be due 30 days after the 12-month period. The first one's August 31st. So it coincides with the interim report as well. And these slides will be available on our website afterwards, so you can have that table. So let's talk about the fiscal recovery key dates. So payments can only be used for costs incurred. So there's that cost incurred term again, from March 3rd, 2021 through December 31st of 2024. However, the interim final rule defines costs incurred in alignment with the uniform guidance. And it allows for the recognition that you can incur a cost, but not necessarily have it paid. So it requires an obligation by that December 31st of 2024. You have a legal obligation to make a payment to someone or to expend funds. You have a legal contract, what it might be, because there's a lot of infrastructure is allowed. So you may have all of your funds obligated in a contract, but the work still continues. And so that's where they have a period of performance that runs to allow you to liquidate obligations and continue to perform that work through December 31st of 2026. So that is a key change from the coronavirus relief funding, where costs incurred was cash out the door. They later then retracted with a little bit of what they considered like a liquidation period. This is very clear that you have a period of performance through December 31st of 2026. I believe they even give you a reconciliation period after that to finalize payments, but that work needs to be done by that date. So everything's forward looking, just kind of thinking through that. It does talk about pre-award costs not being permitted, but it does allow some things to retroactively go back to March 3rd, such as premium pay. We'll talk about that. But again, you cannot go anything before March 3rd of 2021. So as you think through a lot of the things that you may have spent and the time you may have ran out of coronavirus relief funding and this funding comes through, there may be a gap in time. And I do encourage, in the last webinar, we had Laura Adcock Elder from Ohio EMA. If you do have costs that are related to personal protective measures, to definitely look to FEMA for kind of that gap where you may have had costs for sanitizing and such that weren't covered. So let's talk about allowable uses. And I'm going to have to breeze through this because we have a lot of content in a short period of time. I talked a lot about the costs incurred in the date, but there are really 4 buckets of funding. One's to respond to the public health emergency and its negative economic impacts, which is really similar to the funding that we had before. Premium pay to essential employees, and we'll talk about that. Revenue reduction, and water, sewer, broadband infrastructure. So those are the 4 buckets. If it doesn't fit into those 4 buckets, it's not allowable. So to talk about the responding to public health emergency or negative economic impacts, there are various items that are called out. These 12, I won't read through all of them, but these 12 were in the interim final rule as all of the list of things that could be covered that are allowable. And so, you know, I'll just take assistance to households if you're covering folks who may have a gap, such as in rental, although there is a rental program, so you'll want to be careful that you don't overlap with something else. You know, those types of things are sure, as long as you can determine that they were impacted by COVID and you're not paying more than the negative impact, you know, those things are allowable right off the gate. But if something in your list is something that you want to do is not in this list, then they do give you a way to make a determination on whether or not it's eligible. So first, if you can determine whether and how the use would respond to the pandemic, then that's kind of your first step. So this is like a 2-step process that I have a cost, it's not on the list, I want to determine if it's eligible. So how would it allow me to respond to the public health emergency? I've got that. So then second, they're asking you to do an analysis of that and determine the 2 criteria. Identify a need or negative impact that was a result of the pandemic, or identify how the program, service, or the intervention addresses that identified need. So if you're able to say, okay, yeah, here's what it does, it was because of the pandemic, and what we plan to spend the money on will actually address this, then you're good. It might not be in that list, but it would be eligible based on a criteria and interim final rule. I would make sure that you keep all of that documentation on how that analysis, the logic, maybe write a narrative, make sure everybody's in agreement with that before you make a decision on whether to fund a project. If you are unable to complete this analysis, you can't answer these questions, then it is not eligible under this category. Providing premium pay to eligible workers. And this is probably the one that I think will probably generate the most questions moving forward. They do define eligible workers as essential workers that are in critical infrastructure sectors who perform regular in-person work, they interact with others, and they have a regular physical handling of items that are handled by others. So they're kind of exposed, so to speak, and have been. It does say it can be retroactive. It does. I think it's you cannot go before March 3rd, I'm sorry, of 2020. Premium pay can be up to $13 an hour, not to exceed $25,000, but it does emphasize in the rule that it cannot exceed above 150% of the greater of the state or county average annual wage. And if it does, then it requires specific justification to the Treasury Secretary. So there is a cap there. You'll want to make sure you're managing that as you're identifying who and how you'll pay this out. There are a lot of sectors that are mentioned: healthcare, education, childcare, transportation, groceries. All of those are in this slide here. They're also in the guidance. It does allow you to grant to third-party employers to provide us eligible essential workers these types of benefits. So I want to talk a little bit about the revenue loss. So the interim rule defines a definition of general revenue for calculating this, and it has kind of 4 components to that. It's really revenue collected by your recipients generated from underlying economy. It would capture potentially tax revenues and other types of revenue to support government services. So it does talk about being consistent with the Census Bureau's definition of general revenue from its own sources. It does exclude revenue generated from utilities and insurance trusts. The focus is really on sources generated from economic activity and are available to fund government services. So really just your kind of general revenue type of money coming in to fund your general services within your local government. It does include intergovernmental transfers between state and local governments, but you cannot include federal resources such as the CRF or other recovery funds. So I know this is probably something we're going to touch on in more detail. I wanted to put it in this slide, but we don't have a whole lot of time today to kind of talk about this and too much. But you'll have this. We will touch on this again on the next webinar in June. But there is a 4-step process for calculating this. What is important to know is you have to calculate the difference between your actual to this counterfactual revenue and figure out where you stand. And that is your reduction in revenue. So it's kind of figuring out what would your revenue have been, the counterfactual revenue, what would it have been absent the pandemic, what did you actually receive, and that difference is what is considered your revenue loss. And essentially, and this is the formula, which I'll go into more detail with examples in the next webinar, but it allows you to figure out in 4 points in time, because there is a recognition that they may, some entities may experience lag in effects of the pandemic, especially if the stimulus is kind of in the economy right now. But essentially December 31st, 2020, 2021, 2022, and 23 are the 4 points in time that you can do this calculation and figure out what this difference is. And that difference can be applied towards government services. So if you read in the interim final rule, there's indication that building and infrastructure, including roads, cybersecurity, health services, environmental remediation, school and educational, all of those things, it gives as examples, especially the building of roads, that is only eligible under this government services amount. So if you have an estimated loss of $50,000, and I'm just using that as an example, it's very low, but just an example, and you want to spend $75,000, only $50,000 of that can be applied to the program. The rest of it, you'll have to find another funding source, because you cannot, roads are not eligible for the general use of the funding outside of what you've recognized as revenue loss. So general government services can be used, like the cybersecurity, modernization of cybersecurity can be used up to the amount that you've sustained a revenue loss for general government services. But you also can apply it to other general government services too. Those were just some examples. Water, sewer, broadband infrastructure is specifically called out. It does indicate NEPA, which is very problematic if it had applied, but it doesn't. It tends to delay projects. Does not apply to this funding. You again, we talked a lot about the performance period, so you have that extra time. Just make sure you obligate that money before December 31st of 2024. And but general infrastructure projects, again, I want to reinforce, are not allowable unless they're funded as your government service with your revenue reduction. So they have to be pandemic specific, public health need, or specific negative economic impact if it's anything other than water, sewer, broadband infrastructure. Eligible projects in these categories for water and sewer have to be those that are eligible under the Clean Water State Revolving Fund or Drinking Water State Revolving Fund, and you can go to both of these links, and it actually lays out, if you go to these links, it lays out all the categories that are eligible for each of these projects. So it gives you a really good idea on if you're thinking about water and sewer, what is eligible and what is not. Broadband, I want to let you know, if you haven't read the guidance yet, it does require eligible projects to reliably deliver minimum speeds of 100 megabits per second download and 100 upload. So it does kind of give you a little leeway in cases where it's impractical due to meeting these standards. But that is kind of the standard that they've put on this project. So if you're going to do any of those broadband infrastructures, you have to meet these standards. Projects must be designed to serve unserved or underserved households and businesses. So you need to look for areas that are not currently connected via a wireline connection, and they don't reliably deliver at least 25 download and 3 uploads. So that is called out specifically in interim final rule. And so that you have to kind of live within those parameters if you're going to do any of those types of projects. So some key other key provisions. Funds may not be used to deposit in a pension fund. We talked about that. That does not include if you pay payroll and it's part of covered benefits. They're very clear that that's okay. You cannot contribute to your budget stabilization, your rainy day, your financial reserves. So you must apply your revenue reduction funds to a general government service. Let's see, offset a reduction in tax revenue, which that's been all over the media. You may not pay any financial instrument type of items, pay interest or principal on outstanding debt, short-term revenue, the tax anticipation notes, satisfy a settlement judgment, consent decree. So all of those things were in the prior CRF. And serve as non-federal match for other federal grant programs. It does allude to in the FAQ about the Stafford Act resulting to FEMA, and then when you click the link, it goes to the public assistance program, which is now at 100%, so there isn't a match. However, I think there were some folks that are using their match on coronavirus relief for the emergency management performance grant. That's still unknown. I think that might be some questions that will have to be asked of Treasury. So transfers of funds. A lot of you did this on the last go round. It's kind of transferring to other entities like special purpose districts, fire, water, sewer districts, water conservation districts. So that's allowable. It's very strictly called out. It does talk about it constitutes a subrecipient relationship, and it will require you to do monitoring and overseeing the use of funds. It will also require you to report in your reporting on that subrecipient's use of funds. It does call out, though, if you cannot do kind of a cross-jurisdictional transfer. So, for example, kind of staying within your borders. So, example, County A cannot transfer funds to County B, but County A can transfer funds to a village that's within the borders of the county. So it's really clear that you have to stay within your borders, that it's to carry out, you're transferring money to carry out a purpose within your community, that within your borders, that you could not do without transferring it to that entity. So be very careful about that. I think there was some of that transferring and subgranting that went on with the coronavirus relief that didn't really stick to the within the borders. So that that's a change. Also, a recipient that doesn't wish to receive the funding, maybe you're a direct recipient and you don't want the funding, you have the ability to transfer your funding to the state to keep it in the state of Ohio versus pushing it back to the US Treasury. There is something in the FAQ that has an email address that you can email for more information if you wish to do that. So additional clarification, and I'm really breeze through this. It's kind of some unknowns. We do know the CFDA will be 21.0119 or 019, so it's going to be the same as the CRF. I expect that it will probably have to be different on, in 2 different lines on your CFA or your schedule of federal expenditures. If you have a single audit requirements still apply. And it says in the interim final rule, and I've highlighted the word most of the provisions of uniform guidance apply to this program. So some of the unknowns, we suspect that may be most of the uniform guidance, such as the areas about procurement, will most likely be part of the program, but I'm still holding out hope that maybe they'll come out in an FAQ and say that it's not. But as you move forward, before that's clarified, I would make sure that you are very familiar with procurement at the federal level. We will do a future webinar on that. We're kind of waiting to see where that lands. So if you do have any questions about procurement, feel free to reach out to the grants team. I know I have experience with procurement at the local government from subgrants from the state before, so we can definitely answer your questions if you're you get the funding and you want to start expending it. I would definitely make sure you're at least following the federal until that is clarified, because at this point we have to assume that it is eligible. And then policies and procedures in the uniform guidance, there are various sections where you have to have policies and procedures. Once that's clarified, we hope to develop some templates we can put on our website so you can get those. And then Davis-Bacon, there's several mentions of prevailing wage in the interim final rule, but it doesn't specifically say that Davis-Bacon, which is a federal requirement for paying federal prevailing wage, applies for these infrastructure projects. So more to come on that. So I want to turn it over now to Director Murnix for some closing remarks.
Hello, good afternoon, everyone. Thank you for attending our webinar. We hope that it was helpful to you. This is the second in a series that we have planned at this point in time, but I just wanted to say that even though we are not your conduit through which you will, you're not our subrecipient in this funding. In this particular situation, we at OBM and the Ohio Grants Partnership want to continue to be of assistance to you. So we will continue to provide information to kind of help you parse through the federal requirements. As Stacy indicated during the webinar, we definitely are sensing a shift in the kind of the stance that we're in. These funds and all of the requirements around them definitely show us that the federal government is shifting posture from that quick, fast response and very quick, flexible funding to longer term recovery, a lot more planning, a lot more reporting. So we want to be helpful and help everyone navigate that and work through it. So feel free to continue to ask us questions. We will be as helpful as possible. Of course, we are not going to be providing actual guidance that will come down through Treasury from the feds, but we will help you understand it, and we'll continue to provide these services and webinars like this one. So I hope you found it helpful. Thank you for being with us this afternoon, and we'll continue to work through this together.
Thank you, Director. So we are going to move on to questions. And as I had mentioned that, I've read all 150 pages multiple times, but may not have the answers because there are a lot of detailed types of things that I think are not 100% clarified. But I will be more than happy to take some questions. We have about 6 minutes and see how many questions we can get answered. So what questions have we received in the chat?
A lot of great questions. The first one come out with, had a county indicate that they had less than 50,000 population, and they wanted to know if they were still on the direct route.
I believe that the allocation is been published by U.S. Treasury, and I believe all 88 counties have been allocated funding. So I think counties were and you said it was a county, right, Gene?
Correct.
Yeah, counties were directly allocated to, I think it's the metro cities that kind of had that population. So they'll want to go to the U.S. Treasury website and confirm. And if you're on there, then you definitely want to go out there and start applying for your money.
And speaking of applying, I had a county commissioner ask, how would they get their funding if both the auditor or the treasurer does not want to register with ID.me and give personal information out?
I would I would email the U.S. Treasury. I think if you go out to their site, there is an email address. Oh, I might have it here as I'm talking. Oh, I don't know. There's an email address if you go to their site, and we can put it up in the chat. Maybe Jessica can look that up really quick. But it will, you can tell the U.S. Treasury, ask that question and see if there's a way that you can manually send them information. I don't believe they'll give an exception, but they may, because I have heard a lot of folks were uncomfortable. I'm going to be frank, just my own personal opinion. I was glad that I have identity insurance after I went through the process, although I know that they are protecting and encrypting. It's just, it's, you know, in this day and age, you know, you don't like to give up identity information to do your job, but it is kind of where things are going, and it was the process that we had to go through. So I would email the Treasury and see if they have a different way to apply.
Had quite a few questions about purchasing police emergency vehicles, fire vehicles with this funding.
So I think that you have to go back. It fits in that first bucket, right? You have to go back to that the slide that I had where it's not specifically called out. So does it meet the criteria as a need specific, and how is that addressing it? So if you go back to that slide where it's not specifically called out, what do I need to do to see if it's eligible? It would definitely be the first bucket. I think that the guidance doesn't speak to that as well as the previous funding did. It did have one call out. So I know a lot of people did some social distancing type modifications to facilities. It does have a call out allowing for that in one of the list of 14 or so in the first bucket. But yes, I think you may have to do that analysis to see if those are fundable.
For the non-entitlement units, does the budget include water and sewer funds?
Does the budget?
When you're
oh, the whole budget? You know that they say total operating. So if you would consider that part of your total operating, it does not say to exclude that. So it doesn't have a lot of definition around how that cap will be determined. I expect that to be in the guidance that drops this week with a little bit more detail, because that is one of the questions, the enterprise activities and such. That was one of the questions I had too, on how does that cap apply to total budget.
And a few late minute questions here about interest that Jessica and I didn't get to, about tracking interest and how is it to be spent and handled.
So yeah, I suspect that that's going to be the same as the previous coronavirus relief funding. I don't remember specifically reading that. Well, maybe I did. The interest has to be allocated to this funding and used for the same eligible purpose. So I believe it follows the same criteria as before. You need to make sure you're allocating interest. We've started our monitoring visits. Interest seems to be one of the things people have forgotten to allocate to the program. So you just need to make sure you're allocating interest to the program and you're spending it for an eligible purpose.
Okay.
Anything else, Dean?
Well, quite a lot less questions than we had last time. So people are doing their own research, or you're doing a great job.
It's just a lot. There's a lot of just to absorb right now. So I think we're right on 2:30. So I'm going to kick it over to Pete to close us out. Thanks, everybody.
Thank you, Director Murnix. Thank you, Chief Massey. Appreciate everyone's time today across the state of Ohio. Our great colleagues in public finance and local government. You'll see there on the slide questions. Any questions at all, please email to grants@obm.ohio.gov. Again, grants@obm.ohio.gov. This was our second installment that was recorded, so you'll be able to see it on the grants website and view it at a later time, along with the slides, the slide deck, and of course, from installment 1 last month. And then of course, slide, our third and final installment next month is here, the quick recovery The quick QR code, if you will, is in the bottom right hand. And if you use your photo lens in your smartphone, that will help secure you for June the 24th, 2021 at 1:30, our third and final webinar of Ohio Connects, here today from the Office of Budget and Management and the Ohio Grants Partnership, signing off and wishing you a good afternoon.